Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the update of the YUH-portfolio. I promised it on Monday that I was going to deliver it a little bit later and here it is. So the main thing is I have more than 1000 Swiss francs saved up in the YUH-portfolio right now. In the first month I saved 500 Swiss francs and then the 3 months thereafter I always deposited at the end of the month the 200 Swiss francs that I'm going to deposit for the rest of the time. So that makes that right now I have 1100 Swiss francs deposited, and you will see later in the video how it was invested. But first off, I'm going to give an overview of all 20 stocks that I'm following for the YUH-portfolio. And first, I'm going to give just the raw numbers, how they are performing now on the stock market. So the price, the earnings per share, and the PE ratio. I'm not going to tell everything from the slide, and then I will go on to the quarter results. Sometimes it's a yearly results, but you will see it on the slides as I go over them. So first off, it's AB InBev. Momentarily, it's 51.30 euros. They announced their third quarter results a while ago. Their revenue was up 2.1%. Their total volume of beer that they sold was minus 2.4%, and that's why the people weren't happy at all. But they need to remember that the prices went up quite a lot, certainly in Belgium, where the inflation was pretty high. So there they moved up the prices, quite considerably. So that's why their revenue went up, even though their total volume went down. They also recently announced that they are going to be the official sponsor of the World Championship football. So that's also great. Or if you are from America, World Championship of Soccer. And for the rest, it was actually quite a good quarter announcement. So their profit was up from 17,735 million to 1,971 million US dollar. The earnings per share were up to 0.98 compared to 0.86, and even for the first 9 months of 2024 the earnings per share was up to 2.64 compared to 2.23. So overall, actually pretty good results. Only the total volume of beer sold was a bit negative. Then we have Accor, currently 42.16 euros, one of the few that is actually up for the period between the previous time that I went over the 20 stocks and now. And I think Swiss Re is also up compared to the previous time. All the rest is down, I think. So Accor performed really well. And as you can see, revenue is up compared to the quarter of 2023, up 12%. So to 1,434 million euros. The unit growth was up 3.2%, and they announced that they have a pipeline that is expecting to be up 6% for the future. So that's really good. And another thing is their revenue growth was seen as well in the premium, the mid, and the economy class as in the luxury and the lifestyle department. So that's really important. And the luxury and lifestyle that augmented the most, so 18%. So that was really nice. And for the 9 months of 2024, the revenue was up 11% compared to the first 9 months of 2023. So Accor is on the way to have a really great year. I think how they reported the results, it was actually pretty meager. So you only get the revenue and the unit growth and a bit more detail about how Yeah, the revenue was distributed among the countries or regions and stuff. But yeah, I think they should improve on their quarter announcements. But that's just me. Then you have AXA. So currently with a PE ratio below 10, so that's really enormous and great, in fact. The dividend yield, it's almost 6% right now, brutto, of course, but still, they had a considerable drop compared to the last time I talked about AXA in the overview. And the premiums and revenue for the first 9 months of 2024 was up 7% compared to the first 9 months of 2023. So that was really great. Also, the money that they expect to need to pay out to customers that have damage through storms and so, they said that it was going to be okay, actually, much less, uh, much less worse than what they expected. Their solvency ratio dropped a bit with 6% points, but yeah, that's still 221%, so that's really good. But as you can see, not many numbers were given by AXA, so I can't say a lot about AXA actually. Excuse me for that, I took a sip. So you have BASF, the price 42.13 euros. It was up a bit, but now the past 3 days it dropped again to the levels that it had last week. The earnings per share is positive right now, so it was minus 0.05, but now it is up to 0.55 euros. And now the PE ratio, it's quite high, but I will talk about that when I give the overview slide that I made. And yeah, here you see the dividend is going to be 2.25, and yeah, it's going to drop from 3.40 to 2.25. So the dividend yield brutto is going to be 5.3% or 30% if you buy it right now. BASF, they had a revenue that was up 6.8% in terms of volume, but if you look at it through the lens of the currency, because yeah, they trade worldwide, that currency effect had a really big impact on their revenue numbers, so they were actually down minus 2.9%. EBITDA was up, so 1622 million euros compared to 1545 million euros. Their margin was also a bit increased compared to the third quarter of 2023. The free cash flow was down 61%, and the profit was actually up. And yeah, compared to the previous quarter where they had minus 250 million, more or less, now they had the opposite direction in the positive 287 million euros. And that's why the earnings per share is up, of course. So BASF for me, it is on the way to positive numbers again, and also the PE ratio is going to look really good after the next announcement of the results. So actually for the full year result of 2024, the PE ratio will drop quite considerably if the price remains the same. Then you have Bayer, still with a negative earnings per share. It's up a little bit, so it was minus 1 point. I don't know exactly, but it was minus 1.20 or something like that, or 1.15. Excuse me. They still pay out a dividend of 0.11, so it dropped, and the dividend yield is 0.58%. But if they can turn around the Monsanto cases in America, and if they can turn around the crop science altogether, then they are well on their way. The pharma is still performing very good from Bayer, but okay, the crop science part is suffering quite considerably. If you look at the core EPS, it's 0.24 in the third quarter, so it is even down compared to last year, but still the earnings per share is up compared to what it was. What do I need to say? After the second quarter, the total sales is 9.968 billion euros, so that is up 0.6%. The EBITDA went down with more than 25% to 1.251 billion euros. The net income was very negative with minus 4.183 billion euros, but that because they took they decreased the value of the crop science department with quite a lot of billions, so 4.5 billion I think they took in the books. So that's a quite considerable loss, and you have to take that in. You have to keep that in the back of your mind that they wrote off quite a bit of depreciation of their crop science department. So next year that's not going to happen normally, and that can have a really big positive impact next year. The free cash flow was 1.148 billion euros. Then we have BKW. There we didn't have results actually, so they only publish half-year results, just like Swatch. And you had a capital markets day on the 8th of November, but I still need to watch the recording. So they talked about the solutions 2030, so their vision for 2030, but I still need to watch the recording. So you can go to the site, put in your name, give your email address, and then you can watch the recording, but I haven't done so far, so excuse me for that, but I didn't have time yet. Then you have DHL, where the EBIT actually didn't move, so you still have more or less the same results as in 2023. The operational cash flow is down with almost 20%, so that's not that great. And the free cash flow is down with 32%. So, yeah, compared to the fact that they have a strategy for 2030 where they expect that the compounded average growth rate is more than 5%, for this quarter it doesn't look good. And then yeah, you have the burning packages, you have the plane that crashed, so that's all not that great for Deutsche Post or DHL. They are really a good firm. I like working with them for sending packages, so I hope that they that they improve their results. But when I see this with the cash flow going down that much, that's not positive, of course. Then we have Enel. There, yeah, the revenue for the first 9 months of 2024 is down with 17% compared to the last year, the first 9 months of 2023. Their interim dividend is in January, and it's going to be half of the dividend that you can expect for the whole year of Enel. So they have half yearly dividend coupons, so that's really nice from Enel. We still need companies that pay out quarterly. We have only Shell, I think, that pays out quarterly. So we can do better than that. The EBITDA is up 6.5%. The profit is up 16.2%. How they do that with a revenue that is down minus 17.1%, you have to go and read everything. But actually they are, yeah, they have really big debts. They paid a lot on it already in the past 9 months, but they need to do better. So when you have a revenue of 57.6 billion and you only pay off around 2 billion of your debt, yeah, I can't pay into a firm like that. So I'm really waiting for Enel to do something about the debt. So when that one goes down below 40, then I will be happy, and then I can start putting money into Enel. Then we have Eni. The EPS went down quite considerably from Eni because their third quarter wasn't great at all, so their profit down minus 73%. They are paying off their debt level quite fast, so yeah, that's actually pretty good, you should say, but it's weighing on their overall performance right now, so that gives a bad impression. I think Eni is on the good way, much better than Enel right now. But if you look at all the data right now, and if you look at the quarter results that they put out, the ones from Enel look better, but overall I like Eni as a company better because they are really tackling their debt. Then you have Holcim. So that's a stock that we already have in our portfolio. So how much did I pay for Holcim? I think it's 78.6, so it's up 10 Swiss francs. One of my positive stocks right now, but it can go bad really fast on the stock market, especially right now. The earnings per share didn't change, 5.33, and the PE ratio is 16.64 right now. The revenue, I already talked about it in one of the previous updates. They announced it for the first 9 months of 2024 being 19.9 billion Swiss francs. And yeah, they are going to split off the American part of Holcim. So I'm still waiting on more news about that, just like a lot of other investors. So yeah, the positive thing about Holcim is their margin. That's one of the best in the sector, if not the best, 19.5%. So that's really great. Infineon Technologies, there, yeah, actually the full year results up till were published right now. So Infineon is one of those firms that don't stick to January till December. They are one quarter ahead. So their margin is 21.2%, which is nice. But for their full year results, their revenue was down 8%. And the only part of their firm that grew was the artificial intelligence part. The other four branches of Infineon Technology actually took a hit. So in that regard, Infineon Technologies for me, as I don't completely believe that the artificial intelligence bubble is going to last, and I call it a bubble because I think it's not going to last. A lot of people don't agree with me on in that regard, but yeah, the bubble it's going on for 1 year right now. Nvidia is going up since October 2023, and it's still going up. But you can already see in the results of Nvidia that their profit is declining. So their growth is also not that high anymore. It's still high, I know it, but you can't overlook that it was much higher and now it's decreasing, and it's going to keep decreasing for the next quarters. And at one time, the investors will say, okay, now it's too low, and then their PE ratio of 55 right now, I think Nvidia is, then they are going to say, okay, that's too much. It needs to drop to 35, and then you see a decline in the stock price of 50% in a heartbeat, and that's going to be a slaughterhouse. So I think you should be careful with stocks that have a really high PE ratio, and especially Nvidia, it is a cyclical sector, and everybody is now talking like it isn't. But yeah, it's a difficult thing. Then you have ENG, the bank, with the PE ratio right now just above 7. They had okay results, so total income is up slightly, but the return on equity is more than 13%. So they were also scarce with information, ENG. They talked a lot, but the numbers they were actually lacking. But that's a phenomenon in Europe that we see, yeah, all over in Europe. They report the quarter results, but it's not at the same level as the companies in America do it. And I think there the European companies should do better. Their yearly reports are better than the reports from American companies, but their quarterly results should be better. And their half-year results of many companies are really great. And sometimes, like Shell, for example, they really put out good quarterly results. But I think that a lot of companies in Europe should do that too. Because yeah, when you see the results that you only get on the after the first quarter and after the third quarter, yeah, then a lot of investors are from abroad are like, hey, what is this? This is really not many information. What do I need to do about that? And yeah, then they sell. So ENG, do better. You are a bank. You know how to deal with numbers, so please report them better. Logitech, they already talked about it too. So their total sales were up 6%. They also said that they are ready for the Christmas period where they are going to sell a lot of material, hopefully. And their earnings per share is 0.95% in the second quarter, so they are a quarter behind. And you have the gross margin that is 43.6%. So that's really high. And the only thing that I wish is that they put out more the things that they are working on, so that we as investors know what they really want to focus on, and not just say in general, okay, we are focuses on videos or on, how do you say it, on goggles, 3D goggles and stuff. No, I think they should really be more specific. Then Nestlé, you see it here, the PE ratio is below 18. I was considering buying Nestlé, but yeah, the investor day of Nestlé, I was waiting for that one, and then as the day went along and more information was written in the media, I was reading it and I wasn't convinced, and a lot of other investors weren't convinced as well. So it went down further and further, and I think it's going to continue well into January. So I think they can go down even out to 73, 74. So I'm still waiting to buy Nestle. It's a great firm. It's the world leader, and I think it's just a pity that their communication, because of their CEO change as well, of course, that yeah, they should do better. So their total sales was down minus 2.4%, but that was mainly due to the currency exchange, of course. And the profit margin was 17% for the full year, so that's not bad at all. And the organic growth was 2%. And there the investors were expecting 3 up to 4%. So 2% there, they fall short as well. And I think they can't change a lot in the 3 months that are already going on. So I think the organic growth will remain 2%. So when they announce that, investors again will be disappointed. So I'm still holding off from investing into Nestlé. PSP Swiss Property, one of the best firms. That one is also up a little bit compared to the previous time that I talked about PSP Swiss Property. So there are only 3 stocks actually up compared to the previous time that I talked about all 20 stocks. So there you have more numbers than on a lot of other reports. So that's really great from PSP Swiss Property. So in the third quarter of 2024, the revenue was up to 85.8 million Swiss francs compared to 84.2 million Swiss francs in the third quarter of 2023. Their vacancy went down from 4% to 3.6%, and they expect it to go further down to 3.5% at the end of the year. So that's really great. That means that they will have more income from the same properties that they own. So that's really great. For the 9 months of 2024, their EPS value is actually down 15.4%, so to 3.69, but that's because they had to write off, yeah, it's accounting wise that it happened. So for me, the earnings per share for Swiss property isn't that important. It's only important for me for the payout ratio, but the payout ratio is still okay for PSP Swiss property because it's a real estate company, of course. For me, the vacancy is important and the revenue, that stays on point, and they have great customers, they have great properties. So for me, PSP Swiss Property is a great real estate company in Switzerland, and you can see it on the PE ratio. So yeah, it's too high for me. I'm waiting till it drops below 18. So I will wait for a very long time, I think. Then you have Shell. So there, the revenue was $6 billion. The dividend will remain stable for at $0.344 per quarter. So here we finally have a quarterly paying dividend payer, but it's a UK stock, of course, and in the UK you have quarterly paying companies. For the rest of Europe, they should take an example. Okay, this one is on the Amsterdam Stock Exchange, and it pays out normally in euros. And yeah, the profit, it's down $0.6 billion. So they are losing money. And the previous quarter, it was negative 0.6 billion as well. So that's not great. And they still have a debt of 35.2 billion. And that's also weighing on the stock, of course. Then you have Siemens with an earnings per share of 10.28 euros and a PE ratio now below 18, just like Nestlé took a hit as well in the past month. After they announced their results, which were really great, it went up above 187 euros. But yeah, the past week, all the stocks took a really big hit, especially yesterday. So yeah, you can see it. Profit margin 15.5%. Their revenue up 1% compared to the previous quarter, and in the full year results of 2024. So this one is also already publishing the full year results, plus 1%, 75.9 billion compared to 74.9 billion last year. The dividend, they are going to rise it from 4.70 to 5.20. So that's a rise of 10.6%. So in that regard, Siemens is really doing great, and for me, a great stock to keep an eye on, to pick up together with Nestlé. But for Nestlé, as I said, I'm holding off. Then you have Swatch Group. Nothing to report. They don't publish half-year results. They only publish half-year results, so no quarterly results for quarter one and quarter three. Excuse me. Then Swiss Re, the insurance company, the reinsurance company here in Switzerland, there the earnings per share is 10.32 Swiss francs, a PE ratio of 12.47. The revenue was 2.2 billion US dollar, and the return on investment was 3.9%, and the return on equity was 13.4%. So here, nothing about the solvency number, which I actually expected, but it wasn't written anywhere in the report, unfortunately. I think they should always report it, but yeah, maybe I looked over it. If you know it, please let me know in the comments down below. Then you have the final stock, so Volkswagen. The price is 82.40 euros right now, so I lost quite a lot of money on this stock. So my winner is Holcim, but my loser is Volkswagen. And the PE ratio is 3.37 right now, so still a little bit above what I bought it at. But then the earnings per share was higher because they didn't announce the quarterly results just yet, and the earnings per share of Volkswagen in the quarter was down quite considerably. So the total volume, they sold 6.5 million cars, so 4% less than the previous 9 months of 2023. The profit was down 21%, but as I said in one of the previous videos, that's mainly because they took a lot of provisions for Volkswagen already and also for Audi. So there a lot of negative things are already written off from the accountant side. The operating margin is 5.4%, so that's actually a little bit low. It should be above 6%, but 5.4 is still okay. But seeing that the total volumes go down with 4%, that's not great, of course. But they said the last 3 months were going to pick up. So let's wait for the final results of the year. And also let's wait what the negotiations between the union and Volkswagen management will bring in the next couple of weeks, days, because they are starting to threaten with strikes and stuff. So for Volkswagen, it's still yeah, an exciting time ahead. For a lot of people, it's not that exciting, of course, but for me, I'm not going to buy until it's down more than 30% for me. So that will be around 74, 75 euros. And then I know that when it recovers to 100, that I make actually a considerable profit then. But that's for the future, and I have to see what DHL is doing. I have to see what Nestlé is doing. So, and then the overview slide, it starts blank, but I always try to put my stocks into categories of buyable, and then I list them like this, and I say, okay, Siemens is one of the stocks that interests me, just like Nestlé, but that one isn't in the buyable just yet because, as I said, I expect it to go down further. So Siemens is on the top of my list right now. You have still ENG that's on my list. Logitech is also still on my list. AXA is on my list as well as one of the 5 buyable stocks, and AB Inbev is also on my list. Then you have the buyables, but they still need to drop, and there you have Shell. So it's almost there because I put in my head that it needs to be below a PE of 13, and it's now 13.01. The Swiss Re Holcim is here as well. So I bought Holcim when it was at a PE of 14.75. So for me, it needs to be below 15, and now it's up to 16.64. You have PSP Swiss Property that needs to drop quite considerably because yeah, it's just really performing great. And then you have Accor with a PE of 18.65. It's also way above the PE of 16 that I want it to be. Then you have the buyables, but so there you have DHL. So that's yeah, it's valued at a nice PE ratio right now, but the free cash flow is dropping, and I need to see a reversal on that trend. Then you have Nestlé, which has a bad perception right now, and which keeps on coming into yeah bad news actually. So every time when they report it, it's in a negative way, and that weighs on the stock price, of course. Then you have BKW. So for the future investments, it's going to cost a lot of money. So that's why the PE, it was 18, now it's 17. I bought it when it was at a PE valuation of 16.4. So maybe I even have to drop it to a PE of 16. So that's why it's in orange, to look at maybe that I should decrease it. And okay, it's 15.96 right now, but it's not that much different from the price that I paid a couple of months ago. For Swatch, it's actually the same. It's dealing with a negative perception, and China isn't picking up like some people thought it was going to be. The economical stimulation that they announced wasn't as big as some people expected it to be. So that's why Swatch is suffering a bit. Okay, the exports to the United States is up with 12%, and the export to China is down 2.1, 2.2%. So America is making up a lot of the losses that they are taking in China, or losses, I should say, fewer cells that they are having in China. But yeah, China is their biggest market, so that's a bit weighing on the price as well. So maybe I should put here a PE of 16 as well. So when it's then below 16, maybe I can pick up some shares, one extra share, because it's more than 160 Swiss francs. So when it drops below 160 Swiss francs, maybe I can pick up a share then and lower my overall cost of Swatch. Volkswagen, yeah, I still think that it's a great company. My PE remains that it needs to be below 8. It's currently 3.37, but as I said, it's there is a restructuring going on, and you have union threats, you have all different kind of stuff that is weighing on the stock. So I'm holding off of buying extra shares. When I buy it, it will be 2 shares, of course, and it will be around 74, 75 euros when I buy into it. And then you have the final category, and that's the category that I think is not buyable right now, and or is reaching the selling limit. So when I have bought it, it's depicted in blue, and when it comes in this region, maybe I should think about selling it with a profit or with a loss. I can also sell with a loss when I think it's going the wrong direction with a company, and I don't believe in the company anymore. I'm going to sell it, and I'm going to replace it in the YUH-portfolio as well. BASF is on the top of the list because I think that one is the first one that can move out of the category because of the PE that is actually going to move down quite considerably after the fourth quarter results are going to be announced. Oh man, I should have taken another color than the green. It's really hurting my eyes, so hopefully you can live with it. I'm sorry for that. Infineon, yeah, only I say KI because it's künstliche Intelligenz, so I'm sorry for that. It should be artificial intelligence, of course, so the next time I will adapt that. Then you have Eni, which is also quite a lot above the PE ratio that I want it to be. Enel, they are almost there at the PE ratio, but they just have too much debt for me. And then Bayer, yeah, they have a negative EPS, and I don't buy stocks that have a negative EPS. So it increased a bit the EPS of Bayer, but they are far from above the zero mark. And then when they are above the zero mark, they will have the same thing as the BASF, that they have a really high PE ratio. Sometimes I will already buy it, even with a high PE ratio, because I know that it's going to change the earnings per share when the quarter results are announced. So maybe I will do it with BASF around February, but that's a long way to go. And I'm still hoping for Siemens, for Nestlé, for DHL. And yeah, AXA is also a really great contender for buying. And I didn't mention one stock, and that's AB InBev, because on the 25th I deposited 200 Swiss francs, so now I have 1100 Swiss francs. And the total on the U is 1070.21. So you see that I'm in the red right now on the U portfolio. And here you can already see I bought 3 shares of AB InBev. And it cost me just a little bit below 160 euros. And I'm going to tell you more about that in a few minutes. But the cash position right now is 70.91 Swiss francs. And there is still 1 cent missing, but I'm not going to care anymore because breaking my head on it, that's I have a lot of work to do for the rest as well, so I can't put more time into it to search for that 1 cent. That's not worth the time actually. But the great thing is that when I bought AB InBev, they said that on the U side, it is always said that when you buy a stock, they take the biggest saldo that you have and they buy the stock from the biggest saldo. But what they in fact did was they took the euros that I had, and then the rest they took from my Swiss francs that I deposited, and they converted those into euros. So they took 129.09 Swiss francs and they converted that into 137.27 euros. And the rest was from the balance in euro that I still had. So that is really great to know, because now I know that when I receive dividends in euro and I buy something in euros, that they will use those euros that are there. So that I think is really great, and I don't have to convert Swiss francs into euro myself before I buy then something in euros. So I bought 3 pieces of AB InBev for a price of 53.1 euros. So you see there was a little bit of a hiccup, but I'm going to explain in a minute. So I think it's AB InBev, it's a really great stock. So you always are here in the region of buying and of owning stocks. And I think it's more or less in the middle of the risk for buying stocks. And yeah, I'm from Belgium, and now I'm a proud owner of AB InBev, the biggest brewer of the world. And yeah, they make great beer. And I'm also happy that it's below a PE of 18. So I bought it at a PE of 17.41. Now it's even below 17. And yeah, I need to go to work on Monday. So I already put in an order on Sunday to buy 3 pieces of AB InBev. I knew I was certainly going to have enough money on my U account because I was going to deposit the 200 Swiss francs on Monday morning. And yeah, I had to accept. So here is a writing failure, but excuse me for that. So they already said that when I put in the order that it was going to be executed around 9:10. And if you look at it, here it was at 9:08, 9:09, and then it was 53.10. And that was the highest moment of the day, 53.10. So I bought it at the top. And that can be the case because, okay, you have to put in an order. You can't work with the limit on the YUH platform. So really important that you know that. But of course, the costs are lower and I still had the trading credit. So yeah, in the long run, it will not matter. It's a little bit annoying, but you know it all up front. So yeah, it's the way it is. I have to live with it, and I don't have a problem with it at all because AB InBev is a great company, and in about 10 years after they have paid me 10 years great dividends and they went up in value as well, those those 50 cents that I missed because I couldn't put in a limit order are going to mean nothing. So it's only 1.5 euros that I missed actually. And then the day after, here you can see it was already 51.30. It ended now at 51.30, but Tuesday morning, so yesterday morning, it dropped to that point. So even if I had bought it at 52.50, I was still down 1.20 compared to that point. So I wanted to buy it at 52.50, but yeah, it's 60 cents, 50 cents. That's in fact nothing. The fee only 0.24 euros because I had the trading credits still to my availability. It's going to disappear on the 3rd of December, so I'm not going to buy any stocks anymore. And then the trading credit is gone, so they are going to remove it. And in total, I used up 8 and a bit of the trading credit that was given to me, and I think that's a great thing. You don't have to overtrade just because you have trading credit. You can lose a lot more than your trading credit just by starting trading. And this is how the portfolio looks right now. So my investments are just below 1,000 Swiss francs. The Swiss coins that I have is 285 right now because I did one trade, and for every trade you get 5 Swiss coins. So in that regard, that one is up a little bit. But as you can see, yeah, AB InBev is down 5.40 euros, Swatch is down 4.85 Swiss francs, BKW is down 3.80 Swiss francs, and Volkswagen, my biggest loser, is down 34.20 euros. ENG hardly moved, 0.98 euros. So for me, that's no big deal. And Holcim, my best performer, up 20.20 Swiss francs. So Holcim, Logitech, ENG are doing what I expect them to be doing. BKW, Swatch, and AB InBev are underperforming. Why it dropped so much yesterday, I don't know, but yeah, they signed the contract with FIFA for the World Championship, and still it dropped. So it can happen. And Volkswagen, yeah, they have troubles. So hopefully, when it drops below 75, I can at that time think that it's a good buy, and I will buy more than of Volkswagen. So round up, I deposited 200 Swiss francs. So far 1100 Swiss francs deposited on the YUH-portfolio. I have 1070.21 Swiss francs on the YUH-portfolio right now. The cash is 70.91. So invested I have 1029.09, and that is with costs and exchange costs included. And I have right now 999.30 Swiss francs invested in investments. And you can see it here. Here it's now, yeah, when I took 20 minutes later, I took a screenshot of the graph, and then it was 1001.85 Swiss francs. So that's because the euro went up a little bit, but still is down for the day. The euro is really a weak coin right now. And the stocks, they make up 994.28 Swiss francs. And the crypto, the Swiss coin, is 5.02 Swiss francs right now. So it went up a little bit to 1.762298 cents. And if you want to know exactly the profit and loss on the stocks, I have now a loss of 34.81 Swiss francs. And if you look on the YUH-portfolio, it's 29.55, but that's because they also include the 5.02 of the Swiss coins, and they also exclude the exchange costs. But you do have the exchange costs. So for me, my loss is actually bigger than I always see on the YUH platform. So for me, it's minus 34.81. And I should go back. So that's minus 3.38% so far for the first 4 months of trading or investing, I should say. And then you have the dividend overview. So you have the stocks that I own right now, how many stocks I own, and how much dividend that they gave last year. And as you can see, ENG, they have two dividend payments. They have one in April and they have one in August. And in total, I have right now 17.82 Swiss francs and 26.01 euros. It's brut dividend, so I don't deduct the withholding tax, but I should do that, of course, because they are going to do it anyway. So the YUH is going to withhold the taxes, and for the foreign shares, they are certainly going to do it. So ENG is going to be 15%, and AB InBev is going to be an extra 30%. So that's quite a lot. Huawei is going to be 0% because we have a double taxation treaty with Germany. So in that regard, Huawei is actually really great. And I will need to do a lot of extra paperwork for not that much money, but I'm going to do it. I already said it in one of my posts to a question of one of my followers, that I think it's really important that we all do it, and yeah, give a lot of paperwork to the taxation departments so that they finally do something about it. Why they don't stop just the double taxations? So Ireland, when they give the dividends to foreign countries, they never withhold tax, because they say we withhold taxes for our people, and the foreign countries should do it for their people. So that's easy, and I think all the countries should work like that. So Germany, for us, luckily in Switzerland, they already do that because they say, okay, we have a double taxation treaty. Switzerland isn't withholding taxes for German people, and Germany isn't withholding taxes for Swiss people on dividend payments. Why the Netherlands aren't doing it, why Belgium isn't doing it, why France isn't doing it? It's just because all the people think it's too much hassle and they don't do it. So those countries can keep that money, and actually they don't have right to keeping it. But you have to take the extra step, and from the moment that we all do it and they have to put in extra people to to deal with all those papers, they are going to say, okay, now it's not worth our time anymore and our money anymore, because they are really all demanding their money where they have the right to. So let's just stop doing it altogether and pay them their complete dividend, and then we only have to report the dividend that we received from the shares, and then we pay taxes here in Switzerland as we always do on Swiss stocks as well. And the sad thing is, I wanted to use the print screen of GetQueen here, but unfortunately the dividend of Volkswagen is 2 times in their app. So they do a miscalculation for Volkswagen, and as such I couldn't use their print screen for it. And yeah, for them I have around 50 Swiss francs, because they just calculate 2 times the dividend of Volkswagen extra. So it's 53 point and a bit Swiss francs that they say that I am going to receive. So I don't know how they get to it, but in June they say that there is an extra payment of Volkswagen, but there isn't one. So with that being said, I thank you for watching to this one. Please consider subscribing to my YouTube channel. Hitting that like button helps out the channel enormously. And thank you for watching this one, and see you on the next one on my YouTube channel. Bye.